Start again. Well, welcome everyone to SumZero. Thanks again for joining us today. I'm pretty excited here. It's a very interesting topic we have on tap. I see a lot of familiar folks and a lot of new faces as well. But for those of you who are joining us for the first time, SumZero is an investment research community for professional investors to share research and ideas with well over 20,000 analysts globally. So we're excited about the panel we've assembled today of industry experts, both on the corporate side and investor side. I wanted to particularly thank Compton from the GPO Fund for his work in getting this webinar together. If you're a SumZero member, you can actually access his work on Spire, on SumZero itself. But for now, just to kind of move things along, just wanted to pass it along to Compton at Global Public Offering Fund. Key, do you want to take it away?
Absolutely. And first, I'd like to thank Divya and the SumZero team for hosting this event. Really appreciate the venue here. And I'll quickly note that our GPO fund exists to identify globally scaling firms that want to enter the public markets. And having analyst coverage and community conversation about these companies is really critical to their long-term success, especially in a world where passive investing has become so dominant. So, first off, my thanks to you guys for being an innovator in the analyst community, and thank you for that presence. Second, I'd like to introduce our topic today, which is a conversation about the fundamentals in the new space industry. And, critical to investors are topics like innovation and growth. Critical to our society is the advancement of science, technology, engineering, and mathematics, what we all know as STEM. And what is now commonly referred to as the new space industry encapsulates all of this, while perhaps also capturing some of our childhood wonder about the stars and our galaxy. And that's what makes it such a unique and different topic, but also being literally at the forefront of every corner of STEM. And given today's geopolitical tensions and economic tensions, it's actually nice to take a step back, literally, and to ponder our Earth from above. And I'm hoping that today's conversation will be extraordinary in that perspective, and both for us as investors and from a societal perspective. And with that said, what I'd like to do is introduce Will Porteous from RRE Ventures. And then we're from there going to be introducing Peter and Brian, the CEOs respectively of Spire and Blacksky. And Will, I'm going to have, Will hails from one of New York City's leading venture capital firms. And I met Will through our GPO investment in Spire in 2019 and had the pleasure of sitting on Spire's board with him for 2 years. And one of the things that makes Will unique is that he's also the COO of RRE, and that translates into an understanding of the inner workings of venture capital that is quite unique. And hopefully you'll see some of that come out in his conversation and his questions here. The second is that, Will has also become a true expert in the new space industry and has dedicated, quite a bit of his investment career to this sector, including early investments, I'll note, in Spire and Blacksky and quite a few of other firms in the industry. And he's consequently going to kick off today's conversation with a brief presentation about the new space industry, and in particular, innovation that is occurring within this area that we call Earth observation. And with that, I'm going to hand the baton to Will. And Will, I'd also start with a really quick question. And, what is it that got you interested in this industry? And, what was it, back to childhood fascination of the stars and rockets, or, investment returns from a venture capital perspective? Clearly the two have merged in a beautiful way for you. And, love to hear that, and then let you, move into a brief presentation about, innovation and how you look at it from a venture capitalist perspective.
Well, thank you, Keith. That was an incredibly generous introduction, and I've been lucky to call you my partner at Spire, and I'm grateful for all the things that we've done together and may do together. I will do my best to live up to that. if anything, I'm in this sector as an investor because I learned from great entrepreneurs and great leaders like Brian and Peter. And so before I even respond to the question, let me introduce Brian O'Toole, CEO of Blacksky, and Peter Platzer, founder and CEO of Spire. Blacksky and Spire are both public companies, and so some of our commentary today is going to be limited to thematic considerations, and obviously we need to be sensitive about forward-looking statements. But my objective to kick things off is really just to talk about our core investment thesis in this area, and then to let Brian and Peter lead us through an introduction to their companies, and then we'll take some questions and we'll talk about what's happening in the environment. But Keith, to answer your question, even before I get to this, because it's a really good question, I have to own up to the fact that I was not a kid who wanted to be an astronaut. I was not a wannabe aerospace engineer. The thing that I fell in love with this sector was really, really boring. It was the realization as an investor that the satellite industry was on the cusp of really dramatic change, innovation-driven change that was going to enable a generation of vastly better businesses. And so I have come at this not so much with stars in my eyes, but with a view that we can build incredible companies and vastly more profitable and successful businesses than have existed in the sector historically. It is a long game, as we're going to talk about. And so I'm going to just take a few minutes and share a couple of ideas that are at the core of our investment thesis in this area and talk about the origins of those. And then we'll get started with Peter and Brian in a minute. So here at RRE, I've led a lot of our work in the hardware and systems area, investing over the last 20 years here as a general partner. Our firm is 28 years old. We've raised 8 early stage funds. And I think one of the hallmarks of our culture is that we retain an openness to new things. And when we started looking at the satellite sector in 2013 and 2014, there weren't a lot of venture firms that were talking about space deals. Let's put it that way. And we frankly, I think we were surprised at the things that we found. We started to see a lot of company formation in the satellite sector. And we went out and we asked some really basic questions. We asked, what does a satellite do? And what does it take to build a satellite? And what does it take to get a satellite in space? And we saw some really shocking things in the kind of 2013, 2014 timeframe. We saw satellites both in the communications domain and in the Earth observation domain that were still essentially being built as one-off custom projects aimed at mil-spec standards of 20 to 30 years of life on orbit, rigorous fault tolerance standards, and that had driven the innovation curve right out of the industry. We realized, we kind of benchmarked microprocessor speeds. We looked at Maxar's Worldview 4 satellite at the time, the state-of-the-art imagery satellite. And we realized it was running a microprocessor architecture that was circa Intel Pentium 2 from the early 90s. And so 20 years, in fact, was roughly the lag time on moving innovation from Earth into space. And then we thought about all the other things that had happened in mainstream computing during that time. The emergence of strong data center architectures and then cloud-based architectures and virtualization. And we realized that the fundamental value shift that had happened in enterprise and network computing had never really happened in the space sector. Those trends are well underway now, and you're going to see a lot of that expressed as we learn more about Spire and Blacksky today. But the number one gating factor was the cost of launch. At the time, 2014, you could buy your own Arianespace rocket for about $100 million. That was the going rate, basically, to get to space on the most reliable state-of-the-art rocket at the time. And that meant that if you put something in space, it sure as hell had to work. And what has emerged since then, and this is the first key trend that we'll talk about today, is that access to launch has transformed this sector first and foremost. And it's very fashionable to think of this as the emergence of new launch platforms like SpaceX, like Rocket Lab, like those who will come behind them. But the reality is that the secondary launch market and the rideshare market has actually been much more important in this regard. And for new companies to be able to buy a cheap ticket to an orbit that they wanted enabled them to begin to rethink the creation of a space-based capability, and then to think about distributing that capability into unique satellite assets. Once you start to think about redesigning a space-based capability into individual nodes, you start to standardize those nodes, and surprise, surprise, all the major input costs that you're talking about, the actual cost of the spacecraft, any payload you may be putting on there from a sensor standpoint, and we're going with rideshare, all of your launch costs begin to decrease dramatically. And you start to be able to create a space company on a much more incremental basis. You can raise some money, you can create some capability, you can launch some capability, and you can sell some capability. And you can get in business early with a minimum viable space product, and you can learn rapidly. And as I hope Peter will talk about later on, the innovation cycle here enables companies like Spire, and the same is true at Blacksky, to move more innovation into space faster with every launch and with every software upload that we make. Now, there are some fundamental trade-offs that come along when you start to focus on standardizing a smaller spacecraft. And there's some laws of physics at play here that we can't get around in terms of image quality or data quality. But revisit frequency, constellation size, all of these things mean that with the opening of the launch market and all the trends I've talked about in number 2, we've radically decreased the barriers to commercial viability in this sector. And lastly, as I alluded to a minute ago, value is increasingly defined in software, just as we've seen in every other hardware network model business. Increasingly, value moves up the stack. And I would posit that within the next few years, most of these companies are really not going to be talking about satellites very much. They're going to be talking more and more about the quality of the data, the frequency and accuracy of the data, and the insights that they produce with the analytics that sits on top of it. And so those are the major ideas here. Obviously, Blacksky and Spire are RRE portfolio investments, so mine is a biased view. Other companies in our portfolio include Ursa, Action Systems, and Link. All 3 of those private. You can view this cycle of trends as very much a flywheel. So we have watched through these companies as launch costs have continued to decrease. And I would argue that even though we have a lot of launch companies that are still on the cusp of becoming operational, we've driven launch costs down to the point where it's really below the reasonable cost of capital in this sector. And what matters is reliability. What matters is getting to certain orbits. And what matters is reliability and getting to certain orbits. And those things are basically far more important in the boardrooms that we're sitting in and making decisions about launch than cost these days. And they're a lot more important than some cutting edge new technology. I care about rockets that go to the right places at the right time for our companies. Within our companies in this sector, we've been very vertically integrated. That's something that's really important to understand. The emergent leaders in this sector have all taken a strongly vertically integrated approach. Controlling manufacturing and controlling the development of the spacecraft has turned out to be really, really important. If you don't do that, you're essentially outsourcing a huge amount of the important innovation that needs to happen here. And finally, and both Blacksky and Spire really embody this, we've seen tremendous advancements in the quality of information coming off of the spacecraft on the unit cost of delivering that. And of course, as constellations, there's far less systemic risk of systemic failure. That Worldview 4 satellite that I talked about earlier, built in 2014 at a cost of several $100 million, subsequently failed about 2 years into the life of its mission. And when it went offline, it took out a very meaningful element of capacity for a number of important customers. A resilient distributed architecture like we see with these companies is much more able to respond to that kind of a catastrophic event. Furthermore, and really much more importantly, we're seeing the ability through these architectures to move more capability into space faster. As we launch new satellites with slightly updated hardware designs, and as we move more innovation into the operating system layer and above, in the sensor layer and the application layer on board the spacecraft. Against that backdrop, the global demand picture in the markets that Earth observation companies serve has remained steady, and it continues to grow. And what we're seeing right now is that there's massive amounts of inbound demand from parties who never thought they'd be able to buy these capabilities, or for whom the previous generation companies were delivering them in a form factor that was just too difficult and complicated to consume. All of that is taking us to what we believe are vastly better financial models for these companies. And most importantly, in which the CapEx and the innovation side of things is really funded out of OpEx over time.
Hey, Will, I think you accidentally may have muted yourself.
Hey, I'm back. Sorry. If we look at what that's meant historically in the optical sector, there's been this just relentless obsession with taking the perfect picture in the legacy companies, an obsession that has meant that massive manufacturing costs, launch costs were acceptable, and that just getting the perfect shot whenever you could get it overrode other considerations. Through the current generation of optical imaging innovators in this sector, and Blacksky is certainly one of them, we've been able to take a fresh view on that and say, listen, we can give you a good enough picture a lot sooner, and we can do it for a lot less cost, and we can tell you more about what's in that picture through our software. And that is a breakthrough value proposition for most of the customers that we deal with at Blacksky, and that I think are in the vanguard of this category. So I'm going to wrap things up and bring Brian and Peter on. But just to summarize, just move ahead here. Just to summarize, so the satellites are not enough alone. Success depends on the interplay of all of these factors, and most importantly, and increasingly on modern software techniques. And I encourage you, as you think about these companies, to think about them increasingly as infrastructure businesses whose value is defined more and more in software. We're at a point where many companies, notable companies in this sector, are essentially fully funded. And the new satellite company operating model looks wildly different than what investors have been asked to consider in the past. Much lower CapEx, much lower OpEx, and tremendous pricing power. And over the long haul, we think wildly better margins and more predictable cash flows because of the nature of the innovation model here. These companies are not going to need to go out and raise boatloads of money to build the next wave of innovation. So they should be less dependent on capital markets to fund their next generation capabilities. This has implications for investors who participate in the satellite sector across the capital structure, from risk equity players to people in senior debt and on down. This should look really different than what you've seen in the past from a satellite company. Finally, I'll just end with the idea that some of this should represent a test bed of what's going to be possible in the communications sector. The dollars it takes to be viable there are still significantly larger. The latency and power demands of an effective constellation mean you're still building a different kind of spacecraft than what we're talking about here. But there's a lot to be learned here about the future of the satellite industry. So thanks for giving me an opportunity here, Key, today. I want to turn things over to Brian and Peter to introduce themselves and their companies. So I guess that leads to the question, who wants to go first?
I'm happy to go first, Will.
Okay.
Really appreciate the opportunity, excited to be here. Some of you may know that I spent 10 years on Wall Street as a quantitative investment manager. And so I'm very familiar with the tremendous success story of SumZero, with many of my friends being members there. At Spire, we are focused on the future of planet Earth, leveraging data and analytics from space to create a more equitable, profitable, and sustainable future for all. And we do that leveraging our fully deployed and software-defined satellite constellation, designed, operated, and launched through us. It is the fourth largest constellation on the planet, the largest one using radio waves to observe of what is happening on or above Earth. And with our data and analytics, we help, for example, the logistics sector be more reliable and more cost efficient, while also reducing its carbon footprint. We help some of the arteries of economic activity, airports and seaports, operate more efficiently with a lower carbon footprint and with a higher throughput. We help the offshore and renewable energy sector produce energy more reliable, as well as contribute in an increasing way to national and international security, leveraging that ultimate vantage point from space to make what is happening on Earth more transparent and more objective and more observable. Spire today, in an overview, has over 100 satellites, over 600 customers. We process a few terabytes of data every single day, ship it out through an API in our subscription model, which is on track to grow from about $1 million in annual recurring revenue to over $100 million of recurring revenue this year per our guidance, in a time scale from just under 6 years.
Okay, I'll pick it up from here. Good to see you, Peter. Will, good to be here. Keith, thank you for the opportunity. Good to see everybody. I'm Brian O'Toole, the CEO of Blacksky. Blacksky has built the first of its kind platform that now achieves reliable and dynamic hourly monitoring from space. And this is really the first time this capability has entered the market and is at the forefront of a significant change in how we use space to understand our world. And maybe I can put that in perspective. For those of you that have seen satellite imagery on Google Maps, it's static. It may be a day old, it might be 6 months or 2 years old. We've now achieved the ability to dynamically monitor the most important strategic and economic locations and assets in the world on an hourly basis. And we do that on demand through an AI-enabled software platform. And to give you a sense of where the technology is today, I could give each of you a username and password. You could log in through a browser, task one of our constellation. You would get imagery and analytics back into your desktop automatically in under 90 minutes. That's a dynamic Google Earth. So this is our platform that's working today with significant economic differences from the legacy types of systems that were used to collect those very high resolution images that Will alluded to from very expensive satellites. It's led to a disruptive pricing model and disruptive OpEx and CapEx in our business. And so we are a data and information company that provides high frequency imagery and monitoring and analytics of these locations. And we enable it through our software platform. And really, where the world is changing is moving from kind of static types of imagery into dynamic. And that is really being driven, the demand for that is being driven by a number of very large secular trends that are happening in the market today. Obviously, conflict and national security, as such as we're seeing in the Ukraine, is driving a significant need for this worldwide, both through the US government and international government types of customers. Global supply chain intelligence, where we have fragile supply chains that need to be monitored, and where businesses and organizations need to be alerted at potential disruptions and the economic impact. Natural disasters and climate change are driving a 4x increase in billion-dollar type of catastrophic weather events that need to be monitored and recovered. And then finally, IoT technology, which is driving high demand for high frequency location intelligence across several industries. So we have a platform that's operational today, 14 satellites that can be tasked on demand through software, with an AI-enabled platform that delivers this intelligence in near real time. We started going to market in the government sector. We are a trusted partner to the most demanding government customers in the world and in the US. In fact, our platform was just validated. We announced a few weeks ago that we had just won a $1 billion 10-year contract with the United States National Reconnaissance Office. Earlier this week, we announced a $200 million AI contract to deliver AI-enabled capability to some of those customers as well. So we are in a growth mode with the platform fully enabled and operational. And now we're expanding both in our international sector as well as in the commercial realm as well. So strong financial performance, 91% growth year over year in the first quarter, nearly doubling our revenues last year and on track to nearly double again this year. So we now have the platform in place, and now we're taking it to market.
Thank you, Brian. Peter and Brian, that was great. Thank you for an initial overview. So I'm going to kick things off with some questions for you guys. Hit some of the, I think, obvious stuff that's on the minds of our audience before we open things up. So, Brian, appreciate kind of the significance of having a customer like the NRO and something like a deal of that size. But would you talk a little bit, and both of you, Peter, this question is for you as well. Would you talk to us about kind of how customers are using your data and information and insights? I think it's easy for people to imagine the kind of defense and security use cases, but some of the other use cases and some of the other customer situations might be surprising to people as you're seeing this market expand. Brian, why don't you go first?
Yeah, I'll go first. I think probably the first and easiest example is what's happening in the Ukraine. So I think the world now understands that this technology is here and it's viable. In our case, we are supporting not only U.S. government customers and international customers in monitoring what's happening there, but commercial companies that are monitoring energy critical infrastructure, food supplies, humanitarian organizations that are using it for understanding how to get resources and develop safe passageways to get people out of the country. What's game changing here is our capabilities enabled through a software interface for all those organizations to do this themselves and have that available on demand. So whereas before you needed to have very sophisticated software, really expensive, and it might take days to get the type of intelligence that we're delivering in a matter of hours. On the commercial front, because of the economics of our constellation, we've lowered the cost of entry to utilize this type of capability with an order of magnitude lower data costs with a on-demand user experience through our software. And we have global construction companies using our platform to monitor major capital projects. We have financial institutions looking at monitoring supply chains and looking for potential disruptions or activities that might affect pricing. And the applications go on. And it's really all enabled through this software interface that's easy, fast, and affordable, and integrates into their platforms in a way that was never available before.
Makes sense.
That's a great jumping off point, Brian, for me as well, if you let me do that. You know, the data that we collect through radio waves has like that advantage that it goes through clouds and all weather conditions and a day and night. So it really brings an incredible transparency to the world. And that could be for, you know, logistics companies. You know, we track every single ship on the planet multiple times a day. As a matter of fact, in general, we cover the earth about 100 times every single day. And so from the simple question of where is my stuff to the more interesting question of where is that Russian oligarch's yacht so that we can impound it, Spire data is used by customers, right? You know, the port of Rotterdam is on this massive digitalization trend, something that we've seen in multiple industries. And they came to us with, okay, we really need to be more efficient to drive our throughput, but we also want to reduce the carbon footprint through our operations. And that's like an area where the data of Spire has made a massive impact for that. You've also seen a greater awareness of the impact that weather has on operations. And so today, about half of the world's GDP, substantially more than 1 billion people, benefit from more accurate weather prediction, and because of the data that Spire collects and delivers to government institutions. You have impact on understanding global food supplies. You have customers that leverage our data to be more accurate in how much energy they will deliver into a grid. And of course, you have national security organizations which want to know where is someone either amassing a certain, you know, aggressive capability or jamming some of the most crucial pieces of infrastructure like the global positioning system, where Spire's capability can literally pinpoint where this is happening, independent of you actually having access to this country like Syria, Ukraine, or China. And so this global transparency that we can bring to the table and that Brian brings to the table really makes a massive difference and has not been possible until just a few years ago.
Very helpful, Peter. Thanks. Keith, you got something you want to jump in on? Otherwise, I certainly have more questions.
I think we both do. I'll jump in with one and ask, you know, what on the path forward, is winning in this sector about access to capital? Is it about access to talent? Is it a land grab for the clients? Help us understand, and in particular from an analyst and a portfolio manager perspective, what should they be looking for? And, you know, how do you guys define success for your respective companies?
So I think the world is actually not any different for space companies today than it was for e-commerce companies in the early 90s. Winning in this industry is the same as winning in any industry. Namely, are you solving use cases for customers where your cost that you want to charge them is substantially lower, or at best at their level of willingness to pay for those services? And if you solve real problems for customers, they will come. And you see that in some of the growth rates. I mean, I talked about it earlier. And so I think that's like the number one. That's how, we define success at Spire is like that growth rate, that ability to solve real world use cases in a reliable and high growth fashion for a broad range of customers. You mentioned access to capital, and I think it's sometimes interesting to look at the amount of capital that new space companies raised to reach about $100 million in revenue, and then compare that with the amount of capital that other companies needed to raise to get there. And one might be surprised how similar those numbers are. And what is even more interesting is that when you then look at the long-term profitability that a company like Blacksky or Spire has, because of the massive barriers to entry, because there are logistical challenges, there are licensing challenges, there are technology challenges that companies like Blacksky and Spire had to overcome that are not insignificant, and that today afford us massive long-term sustainable competitive advantages, which reflect itself in very, very high long-term margins. At the end of the day, this business is just like any other business. You solve a use case at a lower cost than the value that you provide and that you can charge for, you have something very, very interesting. And the technology curve that is happening in this industry, which is actually faster than Moore's Law, which was coming out of the research that I did in France a little bit over a decade ago, is driving that leverage business model, is driving the adoption, and I certainly believe is creating the same transformative wave for leveraging space to solve problems on Earth as the transition from mainframe computers to personal computers, bringing computation to the world and changing how computation can make an impact to for life on Earth. So that's certainly what I believe.
Yeah, maybe I'll jump in. I think a couple around winning, right? This is a massive market, right? We're, geospatial intelligence services are tied into about 75% of the GDP. So there isn't an industry that doesn't use or rely on geospatial information and analytics to power its business. So it's a massive market. I think to a couple points that Peter made, it's really very similar to other businesses. I think space is having its internet moment where, if you imagine back in the early days of the internet, a lot of investment went into the infrastructure, networks, how to build websites, data centers. That's where this industry is today. Launch, Will talked about communications, satellite production. Nobody back then envisioned the Airbnbs and the other applications that were powered by that capability. We're at that point in this industry in a huge market. As Will mentioned, we've taken a vertically integrated strategy to build a very good moat. First off, most people wouldn't believe this, but as a space company, I started building the software platform 3 years before I launched a satellite. And because that was going to solve the distribution and the analytics problem when that data came online. So the software investments, the satellite manufacturing, a real-time operating system that can control these satellites in real time, as I outlined in the beginning. But then you need the talent, and then you need actually access to customers that trust what you're going to deliver works through an informed sales force. So building a space company isn't just about the satellites, it's about all of those other things that have to come along with it to get to the moment where we are today. In our case, because we've taken a software first approach, we do not just process our own data. I'm processing SAR data, I'm processing radar data, RF data, all kinds of IoT data through our software platform, with the goal of being the leader of delivering the actionable intelligence that these organizations need for their businesses. And so that moat between manufacturing, proprietary space network, a fully integrated tech stack, and then a scalable software platform that I can expand every day with new data and analytics is what has built a lot of momentum and acceleration in our business model.
And let me just jump on one thing you said there. I know this is of interest to our audience out there. How should investors think about the different modalities that we're talking about here? Everyone can conceive of optical imaging, taking pictures from space. And Peter, obviously, people are familiar with RF signals, RF signal processing, radio waves, radio frequency. But there are other modalities that have been historically important in Earth observation. There's radar satellites generating pictures through synthetic aperture radar. There is hyperspectral imagery, which allows to see a whole different range of phenomena across the visible spectrum. How important are all of these data types and modalities from an investor standpoint? And how should this audience think about where we are in terms of other technologies and phenomenologies that may be important?
Yeah, I would say when you look at Spire and Blacksky, in Blacksky's case, electro-optical imagery really forms the basis of geospatial intelligence. It is the baseline through which all other geospatial analysis is put in place. In Peter's situation, it's similar in the signals side where you're using it to track or use it to determine weather activity, right? These are fundamental baseline capabilities that can be built upon to drive a lot more value to customers in the market. And so when things like radar come along or hyperspectral sensors that come along, these are additive and can add more information, can drive more intelligence, but they have to have a foundation. And that's where I think the market opportunity is being at the early stages of this with these platforms that Blacksky and Spire have. It's going to allow us to capitalize on these new capabilities coming into the market, either through partnering or other means, to deliver a lot more value over time. And so I will say, Will, like some of these things in and of themselves are difficult businesses standalone. But when partnered and combined with other data, deliver a lot of value. And so I think we're going to be seeing an era of those types of capabilities being brought into companies, or strong partnerships that are going to come together to drive more value to the end customers that are just beginning to understand what they can do with all of this. And what Peter thinks about that.
Brian and Peter, SumZero asked the audience for some questions in front of this webinar, and a couple of questions came in with regard to competition. One member wanted to know, what's your opinion on Maxar Technologies, and how do you think about either competition or collaboration with them? Another question was, more general about, where do you see the competitive landscape, shifting on a, sort of next, 5-year, 10-year basis, and, where are you guys trying to lean in to effectively compete and stay ahead of the curve on those. So if one or both you want to, let's go talk about Maxar first. Are they friend or foe? And how do you view, where they sit in the industry versus where you guys sit?
Yeah, I think
let's maybe sorry, Ryan. Maybe let's take a step back, right? I think especially for people that don't spend their life like Brian and myself and you and Will with the space industry, having a bit of a framework to think about the competitive situation, I think could be incredibly helpful. And I'm gonna lean again on an analogy. If you think of the transportation industry, there are things like planes and ships and trucks and maybe trains, and they have a lot of similarities. They got engines and they got passengers and windows and pilots and wheels, but it's reasonably obvious of how they are different. And that is not entirely true in the satellite industry at this point in time, because unfortunately we call everything a satellite. And Brian talked earlier about like those base technologies. And we have the same thing there in the sense of what I call looking satellites, talking satellites, and listening satellites. Looking satellites, of course, are those that use cameras to capture the reflection of sunlight from Earth. Talking satellites are satellites that provide some form of transportation of data from one space on Earth to another via space. And then listening satellites use radio waves to observe what is happening on or above Earth. And I think it's important to understand that those categories are, as McKinsey would call it, as mutually exclusive and totally exhaustive as planes, ships, and trucks, meaning that they provide very, very distinct capabilities where there might be, and in certain instances definitely is, collaboration across those categories, but there isn't actually any competition across those categories. There can be some competition inside certain categories, and Brian can talk about that in looking, and I can certainly talk about it in listening, but not across categories. And then there might be some additional technologies like e-scooters or sailboats or stuff like that that provide additional services in the global transportation sector. And we have similar things in space, as Brian talked about some of those other modalities. But I think it's really important to understand from a framework perspective that there isn't any competition between ships and trucks. And the same thing is true between talking satellites and listening satellites. And so I think from a competitive landscape, that's a pretty powerful framework for investors to understand. And when they look at a company, first understand where is that company playing. If you're talking about data analytics companies, if you are a parts provider, then you have to ask yourself who is going to buy that part. But if we talk about data analytics companies, which I think is a far more interesting and scalable business model, having that understanding and knowing where there is competition, where there is not, I think is a pretty helpful framework for investors to think about. Sorry, Brian, just felt this was a useful framework for investors as well.
Peter, that's great. I think, to that point, and I'll just maybe start with one more analogy on top of Peter's analogy, which is transportation is a huge market, right? There's lots of modalities there. Same thing here. Maybe on the EO sector, I kind of view it this way. Maxar has built really incredible satellites that provide exquisite imagery that's been used by governments for a long time. But I'll say where we've differentiated is in really think about going back to my Google Maps example of a static mapping world versus dynamic monitoring. And two totally different applications. You might see very exquisite imagery on the news as a point in time. I'll go back to a Ukraine example. In our case, we're monitoring the borders in between at the Polish-Ukraine border at an hourly basis, and we're not just taking a snapshot. We're counting the cars and buses that are backing up on an hourly basis to determine the extent of the humanitarian crisis that's mounting at particular locations. This is delivering actionable intelligence to what's happening on the ground. very similar to what was going on with the 5 nuclear power plants in the country that powered 50% of the country's, provided 50% of the country's energy. You know, we've really carved out the dynamic monitoring and the delivery of intelligence as where we fit into the market, and others are more in the static mapping side of the market, and those are 2 completely different applications.
Thank you for that. Another question that had come in from the audience was really about the business model. If you guys could take, you know, 1 or 2 minutes to talk about, how's a client contract structured? Do they pay up front? Do they pay in arrears? How's that shifting? Some business model, client, revenue understanding would be really helpful. And, is there a SaaSification that's, occurring, or other trends that are occurring within your revenue base?
I'm happy to jump in. There's really 3 aspects to our business model, because we're a monitoring service. It's a recurring subscription revenue type of model. So if you're monitoring locations at a frequency, you pay that really on a subscription. Some of our government customers want to secure our capacity and say for over a particular region, and they'll enter into multi-year contracts on a take or pay basis. So you get long-term visibility, you get anchor customers, and you get a recurring renewal related to that type of engagement. So that's the second model. The other model is more in, I'll call it dynamic data services. So as we're collecting data that goes into our data lake, of all of these locations around the world, we provide API access to that enables developers and others to transact with that database on a recurring basis, to then use that in their own business platforms. So 3 different models. The nice thing about the last one for us is we have a collect once, sell many data strategy. So as we're collecting this information constantly, it's going into a unique data lake on these most strategic and economic assets and locations, which then can be used for AI and can also be used for predictive analytics. So all of those really are supported by a recurring revenue model.
That's very similar for Spire. Maybe just even a little bit more extreme. Virtually all of our revenue is some shape or form of subscription. Those are annual or multi-year contracts, paid monthly in advance or quarterly in advance from the customer, receiving a data and/or analytics service. We do have some historical data sales as well, but really the majority of our business model, the whole structure of the company from day one has always been set up as selling our capability through an API to our customers as a subscription, be those government customers, which is about half of our business, or commercial customers, which is the other half.
Thanks, Peter. That's awesome. So two things before we wrap up here. Talk about how investors should think about the CapEx question. CapEx is always a question when you're building significant assets like a space-based capability. How should they think about that question in terms of where both Blacksky and Spire are? And then lastly, kind of you're both running growing companies at the midpoint of 2022. What's keeping you up at night, and what are you most excited about?
So let me go first on the CapEx side, and then I'll let Brian go first on like the keeping up at night side, and then I finish up on my side on the keeping up at night side. Spire is in the fortunate and the hard thoughtful position of having a fully deployed infrastructure. So we have over 100 satellites, which is all that we need covering the Earth over 100 times a day. And to service all of our data customers, we just maintain that capability. And the annual CapEx cost for maintaining that capability is at the range of $10 to $12 million per our guidance. And when I say maintain, Will, that is just in terms of delivering all this data, but not in terms of keeping at a standstill. It is actually running at 10x improvement every 5 years. It is running at faster than Moore's law what those devices per unit can deliver. As you said earlier, the conversation is turning away from satellites and far more to its capabilities, refresh rate, resolution, amount of data. And for us, we can maintain an improvement cycle of faster than Moore's law, 10x every 5 years, from our fully deployed capability at a CapEx of $10, $12 million that support an almost unlimited amount of revenue through this collect once, sell quasi unlimited amount of time business model. So I would call this exceptionally low CapEx, given the leverage in the revenue production you get and the high amount of competitive barriers to entry you get through the technology that you have deployed.
Yeah, and just from our perspective on CapEx, we, like I started earlier, come at this with a software first approach. And there's, traditionally, at least in the EO market, it's been a hardware oriented approach where those have taken a strategy of, I need hundreds of satellites to paint the Earth every day. We're monitoring these locations every hour with 14 satellites. And that's because we're using intelligent software to point and shoot only what we can monetize. And that leads to a highly efficient CapEx model, similar to what Peter outlined, where we have tech cycles that are 24 to 36 months. The satellites that we have that are delivered imagery that you might see on Google Maps 5 years ago by $600 or $700 million satellites are being done by the satellites we have today under $10 million. We're launching a new satellite next year, which is going to cut the resolution down to 35 to 50 centimeters. That's at a resolution of less than home plate. And then we're adding other capabilities to it. So we'll get to sustain CapEx with that combination of agile technology enhancements, which means we can deliver more value to the customer per unit economic of satellite at a high barrier to entry CapEx cost. So we like where we are with our model. And as Peter mentioned, it's once you get to a fully deployed system, which there's few of us that are at that point right now, and it took a long time to get here. The leverage and scalability is incredible at this point. What keeps me up at night? I'm a go faster guy. I think we've got the capability in place now. We're seeing tremendous traction in the government sector. Internationally is growing just tremendously. Most of the growth that I reported in our first quarter came from international deals. Commercial is just getting started for us. And we're really seeing a lot of demand and interest from across a lot of different sectors. And it's going to market through partners and channels, which is really driving a lot of our investments right now and where we see a tremendous amount of opportunity.
What keeps me up at night is people key and Will. I always say quantum mechanics is easy, humans are hard. And when you think about the total complexity that a company has to manage, it starts out being dominated by technology complexity because it's just a few people. But the number of interactions between people scale, exponentially with the number of people that you have in your company. So pretty quickly, your people complexity dominates your total complexity that you have to manage. That's kind of like the number one story. And the number two story is that you are in a globally competitive labor market for people that, as Key mentioned, come out of the STEM sector, science, technology, engineering, and math, because those are skill sets that are required to deliver the products and capabilities to solve the use cases for our customers. And so you have to constantly be vigilant and on guard, creative in how do you attract, train, retain, and inspire that global workforce with those skill sets. And that is really keeping me up at night, and has been keeping me up at night ever since I started the company 10 years ago, because it always has been a people business, and it will always be a people business.
Thanks, Peter.
Yeah, Peter, Brian, thank you very, very much. I'd like to, quickly here wrap up now that we're at the top of the hour. I'd like to thank Divya and the SumZero team for hosting and putting forward this event. Thank you very much for that. Brian, Peter, just wonderful to hear more about the company. And, for everyone on this call, from an investor perspective, I think, loads of people are being kept up at night by the economics and, the gyrations of the stock market. Is just really, I think, wonderful to hear, from two founders that are thinking, 5-10 years out, that are, focused on, operating leverage, on, building, organizations that are lasting and enduring. And, thank you for that. And Will, thank you for leading off the conversation here with some frameworks and some fundamentals. It's always insightful to hear about, how you approach things and think about things. I think, people forget that venture capitalists are, innovators in that they're funding a lot of, the next generation years and years before anyone else is talking about it at the analyst level. So thank you for your insights and, visibility into the future. And, Brian and Peter, we wish you the most incredible success on the go forward. Thank you.
Thank you, Keith.
Thank you all.
Appreciate you having us.
Thank you, Key. Thanks, everybody. Appreciate the opportunity.
Thanks.